Today, we're diving into the playbook of a company that has kind of quietly become one of the most powerful and, controversial forces in the entire global economy.
Yep, we're talking about BlackRock. This is a financial firm whose size, whose influence, well, one source we looked at just called it unprecedented. And honestly, that might be an understatement.
And check out this number. It just perfectly illustrates their reach. They have this proprietary software. It's called Aladdin, and it basically acts like the central nervous system for the financial world. It tracks over $21 trillion in assets. To put that in perspective, that is something like 10% of every single financial asset on the planet. Just let that sink in for a sec.
So the big question is, how did this happen? I mean, how does one firm get that powerful? Well, to really get a handle on BlackRock's power today, you have to go back to the beginning, back to a single massive career-defining failure.
You see, the story of BlackRock is really inseparable from the story of its founder, Larry Fink. And more specifically, a huge mistake he made that completely changed his entire outlook on finance.
Okay, so back in the 80s, Larry Fink was this Wall Street prodigy, right? He pioneered a brand new, super complex financial product that was just raking in billions for his firm. He was young, he was ambitious, totally on the fast track to becoming CEO. And then, poof, one bad bet brought the whole thing crashing down.
And that product he helped create, it was the now infamous mortgage-backed security, or MBS. Now, the source material we're pulling from has this really great, simple way to think about these incredibly complex things. They call it the financial casserole. Here's the idea. You take thousands of different home loans, you mix them all together, and the theory is that the risk gets spread out nice and even. But here's the catch, the one the whole world learned the hard way. If too many of those individual ingredients, those loans, go bad, well, the entire dish is ruined.
So in 1986, Fink makes this massive bet on where interest rates are going to go. And he was dead wrong. Because of one single miscalculation, his team lost $100 million, just like that, in an instant. As you can imagine, he was basically shunned, pushed right out of the firm. But that humiliation, that failure, it forged a brand new philosophy in him. He realized risk wasn't this thing you just flirt with. It was something you had to understand, inside and out. It had to be mastered.
So there he is, jobless, but he's got this powerful new idea. And with it, he sets out to build a completely different kind of company.
He gets together with the private equity giant Blackstone, and they launch a new venture. But this time, it was going to be different. Forget that old gunslinging culture he came from. BlackRock was built from the ground up from day one with one core principle: master the risk. Understand it, manage it, above all else.
And to do that, they built a secret weapon, a massive computer system called Aladdin. Think of it like a financial crystal ball. It was designed to run endless what-if scenarios, stress testing every investment against pretty much any crisis you could dream up. It really did become the brain of the entire operation.
All right, so for the next 20 years, BlackRock just grows, steadily, quietly, under the radar. But then, 2008 happens, the global financial crisis. And what caused it? The very same mortgage-backed securities Fink had helped invent. And ironically, this was their moment to shine.
While the rest of Wall Street was literally collapsing under the weight of all those toxic financial casseroles, BlackRock was perfectly positioned. They didn't just survive the crisis. Oh no, they rose from the ashes more powerful than anyone could have possibly imagined.
So how did they pull it off? It really came down to two brilliant moves. First, they snapped up the iShares business from a desperate Barclays Bank for a bargain. And just like that, they became the global king of exchange-traded funds, ETFs. And second, the US government, totally panicking and trying to clean up this epic mess, turned to the one firm that seemed to actually get the risk: BlackRock. Get this. At the peak of the crisis, Treasury Secretary Timothy Geithner reportedly called Larry Fink 21 times in a single day.
Okay, so this new role as the government's go-to crisis manager, it came with a ton of political clout. And as BlackRock's power just kept growing, so did its footprint in Washington, D.C. And that naturally started raising some serious questions about whether they were now shaping the rules of the game in their favor.
The source material points to something that critics call the revolving door. It's this constant flow of people moving back and forth between jobs at BlackRock and jobs at the very highest levels of government and financial regulation. And critics, like Senator Bernie Sanders, argue that the super close relationship gives firms like BlackRock
way too much influence over policy. A key example? After 2008, even though they were massive, BlackRock lobbied, successfully, to avoid being labeled systemically important. Now, that's a big deal because that label would have meant being regulated just as strictly as the big banks.
Fast forward to more recently, BlackRock made this big, high-profile push into what's called ESG investing. That stands for environmental, social, and governance. But that move drew a ton of political heat from all sides, so they pivoted. And now they're focused on their next big thing, which might just be their largest conquest yet.
What's the pivot? They're shifting from the abstract world of stocks, bonds, and ETFs to the real, tangible, physical world we all rely on every single day. We're talking about global infrastructure. Things like airports, shipping ports, power grids, all of it.
And the scale of this new game, it's just staggering. It's estimated the world needs something like $68 trillion in new infrastructure investment by the year 2040. And you guessed it, BlackRock is positioning itself to be the #1 manager of that enormous prize.
And this isn't just a plan for the future. We are already seeing this playbook in action. BlackRock has a deal to lead the post-war reconstruction of Ukraine. They're spearheading a deal to take control of key ports at the Panama Canal. What they're really doing, in effect, is trying to buy up the physical bloodlines of the entire global economy.
And that leads us to a really profound final question. This strategic shift, from managing abstract financial stuff to actually owning essential physical assets, it makes you wonder. When one single private company owns the roads we drive on, the ports that bring us our goods, and the grids that power our homes,